Hi everyone, this is Sean, and this is the first installment of what should be a weekly video newsletter. We're going to discuss things like what the market action was for the week, the breakout updates, investment club updates, and some website questions. So let's go ahead and begin. Okay, the last couple of weeks have been really interesting. The first thing we see shaping up back in May, June, July, August time frame is this head and shoulders, this real small one forming right here. And a lot of technical traders, myself included, were really thinking that this was going to be breaking down really hard right here. And one of the things that kind of helped to reinforce that belief is the VIX. Let me show you the VIX real quick. And if you take a look at things, right here on that very same day when it was getting ready to break through that neckline, the VIX was actually cruising just about ready to break through to a new high in recent memory. The VIX is nothing more than a fear indicator. It's contrary to the movement of the S&P 500, and it's literally just a measurement of the amount of put contracts that are being floating around in the marketplace. That's a real rough explanation of it, but basically it's just a fear indicator. So as this rises, that means there's more fear in the market, and as this lowers, there's less fear. We can just go back real quick and look at the October crash and just give you a rough idea of what the fear spike looked like back then. So you can see as the market crashed, the fear really spiked up. So coming back to the little head and shoulders that was forming, it was a reasonable looking little pattern, and there's a lot of reason to believe it was going to break that neckline. Since then though, we'll zoom in here and you see it just really has faded away. Interestingly enough though, this past 5 days has seen a rise in the VIX. So we'll kind of take a look at what that might look like on the S&P 500. Alright, so over here we look at the S&P 500, and as these last five days or so have gone up, the VIX has gone up with it. So right about now, there's a lot of market participants that are not so sure about the strength of this rally. There's not a whole lot of resistance till we get to this 1,000 level, 1,007 to be exact. And it kind of looks like this actually might be a feasible retracement, although we certainly would have some support right there. So it'll be interesting to see how the next couple of weeks shape up. Also, what I think is interesting to note is that you've got a little bit of an inverse head and shoulders pattern forming here, and that's over the larger term, so that is actually bullish. But if you kind of look at it, we have some kind of like a creepy monster looking thing that could be forming a double shouldered head and shoulders pattern. So if we make a new high here, if we come down and test this level down here, we could actually maybe be in for a little bit of another peak up to here and forming a smaller term head and shoulders pattern, which would theoretically drive the price back down. So it'll be interesting to see. It's kind of a tough call right now, not the best trading atmosphere for us swing traders, and always keep in mind when I speak in terms like this, it is from a swing trader's perspective, so maybe 3 to 6 months time frame. Okay, that's the end of this week's weekly wrap-up. So keep your stops tight, and it'll be interesting to see how much further we go before this market finally takes a breather. Happy trading!